Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into a report from SecureTech Innovations. It's a bit like finding out your neighbor traded their old car for a bunch of slightly newer but still used bikes, and then their star employee just quit. Sounds odd, right? Well, let's break down what's happening. This report is like an update a company has to give the SEC, the government agency that watches over businesses when big things happen. In this case, SecureTech filed this report in February. The report is dated February 14th, 2025. First, let's talk about the stock exchange agreement. On Valentine's Day, SecureTech made a deal. They basically swapped a whole bunch of their common stock, the regular kind of shares most people buy and sell, for a smaller amount of a special kind of stock called Series A preferred stock. Think of it like trading in a bunch of pennies for a few dollar coins. Now, why did they do this? Well, it was part of something they call a share reduction plan. That means they wanted to lower the total number of common stock shares out there. It's like if a pizza has too many slices and you decide to take some away to make the rest bigger. When they reduced the number of shares, they took a certain amount of common stock back from investors. This means the company now owns those shares of the stock. After this stock swap, SecureTech had about 35 million shares of common stock floating around, and about 17,000 of those special Series A preferred stock shares. Now, let's talk about someone leaving the company. Their vice president, Abdikarim Farah, decided to resign, meaning he quit his job. The company accepted his resignation and he was out of there immediately. It sounds like it was an amicable departure. The report specifically states that there were no disagreements. So what does all of this mean for SecureTech Innovations? Let's break it down and see what it says about where the company may be headed. SecureTech Innovations is going through a series of changes that could significantly impact its future. Let's analyze their current situation, address risks, and talk about the potential future of the company. First, the decision to reduce the number of outstanding common shares through the share exchange is a strategic move. Reducing the number of shares can make each remaining share more valuable because it means each share represents a larger slice of the company's ownership. This can boost investor confidence and potentially increase the stock price. However, it can also signal that the company believes its stock is undervalued or that it lacks better uses for its cash, which can be a mixed signal to the investors. Now, let's look at their challenges. The resignation of Vice President Abdikarim Farah is a concern, especially since it happened so suddenly. Key leadership changes can create uncertainty and disrupt operations, especially if the role isn't filled quickly and effectively. The company needs to address this leadership gap to maintain stability. This could affect how people see the company depending on how well it handles the loss of the vice president. Also, remember that the report includes a warning about forward-looking statements. This section is basically the company saying, hey, we're making predictions about the future, but things could change. They acknowledge that the company will make estimates about where they will be in the future, but there is always a chance that these plans may fall through. This means there are risks that we cannot see as outside investors, and even the board cannot accurately predict the future. Looking ahead, SecureTech faces both opportunities and risks. The share reduction plan could be a smart move to increase shareholder value if the company's performance improves. However, the leadership change could pose challenges if not managed well. It's crucial for SecureTech to focus on innovation, secure new contracts, and efficiently manage its resources. As for the stock, it's tough to give a precise valuation without deeper financial information, but given the company's current situation, a neutral to slightly bearish outlook seems appropriate. The stock is hard to predict based on so little information. If SecureTech can successfully navigate these challenges and execute its strategies, the stock could see upside potential. But if uncertainties persist, the stock could face downward pressure. Based on the information available, a reasonable price range for SecureTech's stock is between 20 cents and 30 cents per share. This is a conservative estimate that reflects the current uncertainties and challenges. In conclusion, SecureTech Innovations is at a crossroads. The company's future hinges on its ability to effectively manage leadership changes and execute its strategic initiatives. While the share reduction plan could benefit shareholders, the challenges ahead cannot be ignored. My overall view is cautiously neutral, tending toward bearish, as the company needs to demonstrate stability and growth to justify a more optimistic outlook. If you found this analysis helpful, please like, subscribe, and hit the notification bell for more corporate deep dives. What company should we decode next? Let us know in the comments below.